morning, good afternoon, wherever you are watching me from. This is Money Close with Mercy. And so guys, I want to ask you this question. Do you know, or rather do you believe this strategy is actually easier than the CRT strategy that we have all heard about? So guys, without further ado, kindly listen to this. Then after this, I'm going to tell you something.
Here's a quick trading lesson. Go onto a daily time frame, mark out the candle, the previous day high, and the low of the last candle, which is the previous day low. Now, I'm pretty sure looking at this, we're going to have what's known as an inside day. And when you go to a 1 hour time frame, you can see you've got high and you've got the low, and price is moving generally pretty slowly, where you'd want price to come into this imbalance in here, for example. Now, how do I know there's probably not going to be a lot of volatility today? When I go onto forexfactory.com, this white level here indicates, and there is no red folder news, which basically indicates there's not going to be any volatility in the market today. So now I go back to a daily time frame, and there's really no point going any lower at this stage, because the likelihood is we're just going to trade inside this daily range. If you look at previous daily candles, and I'm just going to replay this here, you can see here this daily candle took out the previous day low, this daily candle took out the previous day low, this next daily candle took out the previous day low, and this next candle here took out previous day low, and this blue doji candle took out previous day low. This is a smaller time frame, which is one of those previous day lows being taken. You could be entering the market in areas like this imbalance, targeting previous day lows. You just need a higher time frame bias. So go and back test this. Let me know how you get on in the comments.
So guys, that's the video, and I know you have learned a lot from it. And basically, when it comes to drawing the CRT candlestick pattern, that is what many traders were asking me from the time I posted the last video that was explaining about the CRT trading strategy. And so guys, there is something I would love to clarify. This is very, very important. When it comes to identifying the high and lows, this particular person is going to daily candlestick pattern, or rather the daily time frame. And remember, the daily time frame represents one day. One candlestick pattern that you will see on daily time frame, you're supposed to know, or rather you're supposed to keep in mind, it represents one day. So whatever they do, if they mark the high and the low of that candlestick pattern, you're supposed to know this is not the open or close. They're drawing the high and the lows, and these are actually identified by the wicks most of the times. So guys, once they draw the high and low, they actually keep in mind they're going to find the inside day. And so guys, drawing the daily candlestick pattern, you pay attention on the candlestick pattern that happened previously. So the live candlestick pattern that is taking place when you're trading, you're going to pay on the candlestick pattern that happened before. That's when you're going to draw the high and low. That is it, and I believe every trader knows this. So after they draw all these, it's to lower time frame, which is 1 hour, and this is where by now you're going to see the high and the lows that you drew from the daily candlestick pattern. You will see that on your chart most of the time. So these are the levels that are going to guide you, and I would love to clarify something. Okay, so when you see these levels over here, they will work as your point of interest. Most traders pay attention when price breaks above the high and when price breaks below the low. So that's where the CRT, the candle range theory strategy comes in, because they pay attention on accumulation, manipulation, and distribution. But in this case, he's doing it so differently, because he's going to pay attention what is actually going to happen on that high and low. But you're supposed to know unexpected can happen, especially when we have news. Price has a probability of actually breaking above the high, or rather breaking below the low. You understand? And that's why you're supposed to look for your buying or selling opportunity if that happens. So on this 1 hour, he is going to look for imbalances. Remember, imbalances, this shows inefficiencies in the market, and so many traders wait for these levels to be filled. So whatever he's going to do, he's going to wait for these levels to be filled. So he'll be waiting for these imbalance levels, price to get to those levels. That's when he's going to look for buying or selling opportunity. You're supposed to keep that in mind. And so guys, another thing that you should know and you should keep in mind, he pays attention on news, whatever will happen, or rather whatever will trigger the market. He went ahead looking for news on forexfactory.com, and he found that day there were no news. Okay, so he said market tends to be of low volatility that day, but if he found very impactful news, the red folders news, it could have triggered the market. So that gave him the probability that the market would definitely stick to that range of the day, the high and low. You understand me? And so he goes back to daily time frame. But as for me, I would encourage any trader to stick to lower time frames. You understand? If the price tends to stay a daily range, you're supposed to stick on lower time frame, because you know there is creation of minor support and resistance levels. You should pay attention to them, because the market will retest. The market can as well change the structure, because as you know, the daily candlestick pattern, you compare it to 5 minutes time frame, it is actually going to make crazy moves. So stick to lower time frames to actually notice this level where you're supposed to exit and enter trade, and as well the lower time frame to understand the market structure. That is what I felt like putting across, because this is what you guys need to understand. Daily time frame will show you the bigger picture of the market, but lower time frame will show you exactly what can affect the market, like those minor support and resistance. And I'm telling you guys for sure, price can really react to those minor support and resistance levels. Okay, so another thing that you supposed to keep in mind is when the daily candlestick pattern takes the previous low or high, you're supposed to be thinking of taking your trades. Okay, that's what I actually talked about, but in this case was a bit different, because the market was unable to break the high and the lows, and there was a formation of imbalances. So ensure you have actually drawn the imbalances, you've actually pointed out your point of interest, like the order block, all of them that you're going to watch the market from. They're very, very important, because they will guide you to enter the market. And so guys, when you are on the daily candlestick pattern, I would love to clarify this. When price actually sweeps away your daily high, you're supposed to watch where the market will head. You have to be sure where the market is actually closing it. Price happens to break above, and candlestick closes above the daily high completely, you're supposed to be looking for your buying opportunity. If manipulation happens, but price happens to close below the daily high, you're supposed to be looking for your selling opportunity. If price as well breaks below, or rather sweeps below your daily low, and price happens to close above the daily low, you're supposed to look for your buying opportunity. And as well, if price sweeps below your daily low and candlestick closing below, you're supposed to look for your selling opportunity. That's what I wanted to clarify, because this is forex trading. Again, it is not predictable and anything can happen. Remember, candlestick pattern closure really guides us on when to take trades and when to exit trades. Thank you guys. I hope it is understandable. See you in my next video.
Listen traders, before you make any big mistake, like paying for that expensive course, try reading this book first. This is basically what you are going to be taught by your mentor. In fact, not even everything. If you are a beginner and you have learnt only basics, don't dare funding your Forex account, because you will not like the results. This book will introduce you to another side of Forex trading, because you cannot like forever buy at support and sell at resistance. This book comprises of everything you need to know about smart money concepts and price action, and everything is explained simply. Grab your copy at $10 only, and it will save you from a lot rather than paying for now. If you want to kick off your Forex journey, WhatsApp this number to order your copy. First come, first serve.